What I'm putting together here is a shopping field guide for some common questions that we get asked all the time and some rules of thumb so you can go out there and shop with confidence. So the first thing that I want to get out here is how the price of a property affects the monthly payment of a property. Generally speaking, every $10,000 on a home is going to be about $60 per month on your mortgage. So an extra, say, $10,000, $60, $20,120, $30,180, you get the gist of it. Why that's important is because when we are out shopping, and when I'm out shopping as a consumer, it's hard for me sometimes to wrap my mind around, this house is $10,000, $20,000, $30,000 more. A lot of times this is the biggest transaction anyone's done by a long shot in their whole life. And so those numbers are a little bit hypothetical in people's brains. What we need to do is break it down to how will that affect them on a monthly basis. So when I share that with my clients, that $10,000, $60 a month, it really is helpful for them to really look at the different properties and figure out what's worth it for them. Is it worth it to spend an extra $20,000 to get an extra bedroom, to get an extra, maybe a larger garage, or to get a garage? To get a brick or maybe to get a new roof, brick construction. You know that business better than I do, but the important thing is being able to give your clients an ability to shop and differentiate in their minds what's worth it. A lot of people that we work with are into house hacking, where you rent out the different bedrooms. If an extra $10,000 or $20,000 gets you an extra bedroom or a better floor plan, or maybe an extra bathroom that makes it so now instead of having 2 roommates you can have 3, then an extra $60, $120 a month, but now I can bring in an extra $700, $800 a month because I have an extra roommate. We'll take that all day. So that's the first thing that I want to equip you with is $10,000 equals $60 a month. Number 2 is insurance costs. So everything comes down to monthly payments, really, at the end of the day. And insurance costs here in Florida can vary wildly based on a number of different things. I'm not an insurance expert, but I know that the exterior of your home, if it's built out of wood or if it's built out of masonry like brick or concrete, that makes a difference because it's less likely to catch on fire. Shape of the roof, hip and gable, that makes a difference. I know like roof construction, if it's metal or shingle, can make a difference, as well as proximity to the water, and of course, is it or is it not in a flood zone. So all that to say, a home may actually be more expensive per month, but cheaper as the purchase price. So I'm going to give you an example, a personal example. When my wife and I were first going out and shopping for our first home when we got married, we were looking in a particular neighborhood in Driftwood Estates in Santa Rosa Beach. And there were 2 different phases of the neighborhood. One phase of the neighborhood was built between, call it like 2003 to 2008 or so. And then a second phase of the neighborhood was built from like 2012 to 2017. And so originally we said, hey, our price range is X, and we are not able to afford to look at this newer phase because all of those homes were on average $30,000 to $50,000 more expensive. Well, we went and looked at some of those homes, and we were like, let's go look at one of these homes over here, even though it's in the more expensive part of the neighborhood. Well, when it came down to it, we compared insurances, and even though these homes were about $30,000 more, the monthly payment was exactly the same because it was newer, it had better code, and it was basically better for insurance. And so our insurance was so much cheaper that it actually offset that difference. And so we were able to get a home for $30,000 more, same price. So these are important things to know when you're looking at homes. Typically, age has a big factor on insurance. So if you can get a newer home that's more costly from the purchase price, it could actually be cheaper when it comes to the monthly payment. And then the last thing I want to touch on is taxes. Taxes plays into that monthly payment, and taxes here in Florida are paid in arrears, which means that you're going to basically inherit the tax bill of the previous owner. So if the previous owner was an investor, their taxes are going to be higher. If the previous owner was a disabled veteran, their taxes are going to be lower. So we're going to inherit those taxes. We need to basically take that first year of taxes for the buyer and say, hey, this is what it is, and I'll inherit that. But then the next tax year, that's when it's really going to matter, and it's going to be based on, generally speaking, 80% of the purchase price is what the assessed value will be, times the millage rate, times any exemptions like the homestead exemption. So all that to say that your monthly payments could vary quite a bit based on the taxes at hand, but it's only going to be for that first tax year. After that, it will all level out. So a lot of times I see folks go, well, the monthly payment's so much cheaper on this house. And I'm like, well, yeah, that's because you've got almost nothing for a tax bill because you're inheriting, a little old lady that's got a husband that was a disabled veteran, and their tax bill is almost nothing. That is not going to continue. So those are really the things that can drive the payments there outside of just the purchase price to keep in mind when you're out shopping. Look at the tax bill, figure out the age of the property for homeowners insurance, and remember, every $10,000 is about $60 a month. Happy hunting.